Semiconductor stocks crashed last week, including Nvidia, down about 9%. Advanced Micro Devices, otherwise known as AMD, down nearly 11%. You also had Intel fall over 8%. High-flying Supermicro Computer down over 14%. We'll talk about, are these some areas where you can step in and buy the dip on these companies? We'll look at them technically. We'll look at the charts. We'll look at the volume. We'll see if there's a buying opportunity for any of these stocks in the coming week ahead. We'll also talk about it in the context of the fact that Taiwan Semiconductor reported their December quarter. And we also essentially have full quarter numbers for December with Taiwan Semiconductor. And we'll talk about, is this an opportunity to step in here and buy the dip? We also have to remember we have earnings coming for all of these companies. In fact, Taiwan Semiconductor gives us their full readout on the 16th this week, and then that rolls into all of these companies reporting really over the next 30 days. We've got a big show on the Semiconductor Show this Sunday. Hopefully you guys stick around for all of it. What is going on, investors? Hopefully you guys are doing well out there. Now, like we said, this is the Semiconductor Recap Show where we recap all the major news of the week from the semiconductor industry from an investment standpoint. We usually start things off with Nvidia, which saw its shares slide by about 9% this week. There was obviously the Consumer Electronics Show in Las Vegas. You had a big keynote from Jensen Huang, which was absolutely spectacular. I was in Vegas and it was absolutely spectacular. He's a great salesman. He's a great talker, but there was no major announcements outside of the CFO saying that the Blackwell chip shipments, say that a few times fast on a Sunday, they remain on track, and that is good. So they are actually not only on track, but they are seeing some deliveries. Now, demand continues to outstrip the supply that the company is able to deliver, but that should alleviate itself as we move into the back half of this year. We obviously talked about on last week's show, you had Microsoft announce that they're going to be spending about $80 billion on the data center in 2025. And during the first quarter, I think the company spent maybe only $15 or $16 billion. So you're going to see an acceleration for Nvidia towards the back half of this year. In fact, the upcoming quarter might not be much over and above what the expectations were for Nvidia. It's really the back half of the next year, which we've gone into at length on this show, that you have a wide discrepancy with what Wall Street is expecting with Nvidia in the upcoming quarters. I anticipate it coming towards the high end. Now, aside from the semiconductor companies that are reporting their earnings later this month, you obviously are going to get earnings reports from Amazon and Google and Meta. And these companies will also, at that time, probably update us on their CapEx expenditures for the upcoming year. And so you had Microsoft coming in at about $80 billion. We would anticipate, particularly Amazon and Google, to come to a number at least close to that, if not exceeding that. It'll be interesting to see where Meta falls in here as well, as they tend to fall below those three companies if they rapidly accelerate up into the upper echelon of spending as well. Now, this goes without saying. You have Oracle, you have other companies as well spending a lot on the data center. So it'll be interesting as we move through earnings season over the next 30 days, we're going to get not only a lot of results from the semiconductor companies, but we're going to get projection from the companies that are using these semiconductors in all of these AI applications. Be interesting to see where they come and how that drives the stocks going forward. Now, let's first, before we get to AMD, we'll keep things really tight here and we'll look at Nvidia from a technical perspective. It is a little bit difficult when your stock has been on such a monster run. Obviously, broadly, as we stretch things out with Nvidia, the broad trend is obviously much, much higher. That goes without saying in a lot of cases, but when we look at Intel, that is not the case with that company. Now, you do go through these brief periods with Nvidia where you have these rapid sell-offs. I'm not really anticipating that with Nvidia. Yes, shares were down by about 8 or 9%, but that's not something completely unnormal with Nvidia. Now, more recently, Nvidia has been on a breakneck trend, really since the start of AI down here in 2022. You've been on this breakneck trend. We've broken through that. And this is actually pretty typical of breakneck trends. Not only do you break through the trend, you also tend to come and back test to the top of the trend. you tend to fail there and continue to move lower. None of this is unnormal for NVIDIA. None of it is a cause for concern, at least at the current time, from a technical perspective. There is just simply not enough data here to wonder if this green line, which I'll change to a purple line, if this is going to turn into the next area of support. If it is, you're actually just probably $10, $5 away from NVIDIA being a perfect buying opportunity. Wouldn't wait for perfection on this one. In fact, if you want to wake up on a Monday or a Tuesday next week and start accumulating more shares of NVIDIA, certainly wouldn't blame you, because fundamentally, like we say, things look absolutely fantastic with their Blackwell chip and also with Microsoft and eventually other mega cap tech updating us on their CapEx spend. We'll get to it later in the show, but Taiwan Semiconductor's December readout and obviously November and October were absolutely spectacular. It leads us to believe that NVIDIA's results going forward are going to be very, very good. I think the only thing that we wonder as investors is how much of this good is priced in. I would say a fair amount of it. And on top of that, that means for NVIDIA to continue to have dramatic outperformance out of the broader market and certainly the semiconductor market, they have to come over and above expectations. And I actually think there's a decent shot at that. Now, let's move on to advanced micro devices. The shares are actually hovering above a 52-week low, believe it or not. That's after shares slid by over 10% during the week. Now, AMD actually has a slightly more broader mix of portfolio products than certainly like in NVIDIA. NVIDIA is all in and is obviously the market leader when it comes to high-end data center GPUs. AMD has a solution there. They're working on the software for the MI300, trying to get it slightly more competitive, at least on the software side, to compare to NVIDIA's. But they have other products that are absolutely crushing it, including the Ryzen 7 9800X. Gamers know that this product has been in a massive short supply, at least at the MSRP prices, unless you want to step out and play kind of a reseller or kind of scalper prices for these chips. Now, during a roundtable this week at CES, AMD says part of the success of the Ryzen 7 is the fact that Intel put out a, quote, horrible product, as Intel's Arrow Lake delivered very underwhelming performance. This is months after the Ryzen 7 has hit the market. Intel just completely missing the mark. That is one of the reasons why when we look at Intel shares later on, that it's absolutely a disaster. That means these CPUs will probably remain in hot supply probably for several more months, maybe even the rest of the year, as there's a lot of anecdotal report of retailers getting these in stock and then rapidly selling them. So AMD, when they report their earnings on February 4th, should actually have probably some stronger results as it relates to the Ryzen 7. The problem is they haven't been able to meet demand, and so they continue to try to ramp up that supply over at Taiwan Semiconductor so they can meet the demand that's in the marketplace. They also got some bullish news as it relates to professional systems or kind of higher end PCs used by maybe creators or somebody that needs high performance. They're not just doing email. They're not just surfing the web on their laptop or their PC. They're doing some high-end computer-aided design or those types of things. They're using their computer and really pushing it to the max. What's interesting is AMD chips now comprise of 55% of Puget systems. Again, this is just one survey, one company, but it is showing a trend that AMD is making inroads as it relates to more higher-end computing. It also underscores the fact that Intel missed the mark with Arrow Lake, and you have to wonder, is the subsequent generations that Intel will come out with, will it also miss the mark? And so AMD picking up the pieces that are crumbling over at Intel, but as you can see, it is doing nothing for the shares, as shares, like we said, are sitting on a 52-week low. In fact, in the shorter term, we made a high on shares back in March up over $200, and we've subsequently made a beautiful series of lower highs, and now we're here down less than a year later at $116 per share. There was an area of support up here in the 120s. We've blown through that. So now we're looking for other areas of support. The way you can do that You look for areas of consolidation on the chart. My favorite indicator is this fixed range volume profile. And so you snap this on the chart. We don't have to go too far back with AMD. We're going to start at the current date, which is right here in January. And I want to go back to this area of consolidation that started back in 2020. What this is going to show you is there's a large amount of accumulation of AMD stock that AMD is pulling into really right about right now. A lot of people have accumulated AMD stock between the share price that it currently sits at about $117 down to about $73, $75 if we want to give it a little round number. So what I like to do is you could leave the volume profile on your chart, but what I like to do is kind of snap on what I call my green box. This is my green buying box. In fact, I might raise it up just a little bit, and that allows me to take off the volume profile and allows me to see visually on my chart every single morning, looking for stocks that I want to accumulate. AMD is actually pulling into that range. Now, understand that if you buy at this level, the momentum with AMD in the intermediate term is lower. In fact, it's drastically lower. You're making a high here, lower high, lower lows. It is absolutely a disaster from a chart perspective. We've also crossed through what I would call kind of a longer term trend down here. This has also been broken through, but broken through these areas before with AMD. All this adds up that if you're going to buy the dip on AMD, pick out the number of shares that you want to buy. Let's say it's 10 shares to give us just a nice round number. At these levels, at the top of the buying range, you're only buying maybe 1 or 2 shares. If you do find footing here and you move higher, it will just give you the confidence that you're back in an uptrend. And this was just a temporary slowdown in a much broader trend. But this is looking particularly ugly in the shorter term. We are on 52-week lows. Some fundamental things are pointing to the fact that the company is delivering from a fundamental product perspective, but obviously the stock is not reacting that. All of this in mind that the fact that AMD reports their earnings on February 4th. You'll also get Intel just about a week prior on January 30th. All of those things could move the stock even more dramatically. So you want to be careful moving into those news events and be mindful that AMD could continue on its path and move much, much lower, creating even better buying opportunities. Now, the next stock that we'll talk about is Intel. Saw its shares fall by about 8% this week, down to about $19. We're also hovering just above a 52-week low for the company. Now, obviously, we talked about with AMD how Intel is just absolutely missing the mark from a fundamental perspective on a lot of its product. But with Intel, it goes deeper than that. We're looking for a new CEO at this company, and this is something that could really change the fortunes not only of Intel, but also its shareholders. And according to Citi, we could get an announcement of a new CEO over at Intel within a couple of months. My guess is they're very much actively looking. They probably have candidates on a short list, and Intel, hopefully for shareholders' sake, will make a decision on this relatively soon because there is no time to waste with Intel. They're missing the mark with their current products. Competitors like AMD are absolutely not missing the mark, so Intel needs to get on track really, really quickly. Otherwise, shares could continue to move much, much lower. From a technical perspective, Intel is in a much different spot than basically every stock that I'm looking at in really the entire stock market, but certainly the semiconductor market as well. That is because we've basically been consolidating sideways with Intel since 1998, when I was like in high school, basically. I mean, this goes way back. You literally could have bought these shares. Now, this is not total return. There were some dividends along the way. You'd be maybe up marginally, but you sure as hell wish you would have bought about 500 other stocks other than Intel back in 1998. We've been consolidating in this range, but what you do notice is shares of Intel tend to find support right where we're at, right at about $20. In fact, we found footing in there in the early 2000s, believe it or not, in the early teens, the 12s, 13, 14 time frame. And here we are with Intel. Whenever the stock gets down to this level, we do also hear of rumors of other companies wanting to buy the product division of the company. This would include Qualcomm. I've also heard ARM Holdings potentially wanting to buy part of the company when it gets down to this valuation, because you're looking at a company worth about $80 billion that is still generating massive amounts of revenue. And if they could get some leadership in place and start delivering and maybe focus on better products, well, they certainly could turn things around over at Intel. This is why I stepped in at this level. It's not a big position for me. If it goes down further, I'm not going to be crying or whining. In fact, I'll probably add to it as you move into the mid-teens. You'd want a hard stop loss with Intel below about the $12 range, because if you get below $12, it's anyone's guess where this one would go. In fact, bankruptcy could actually be on the table, believe it or not, or liquidation would certainly be on the table. So, bottom of the barrel type valuation for Intel, and this is an area where I'm actually accumulating some shares. But again, I'm going to own more of Nvidia. I'm going to own more of Qualcomm. I'm going to own more of Broadcom. I'm going to own more of AMD. I'm going to own a lot of these semiconductor stocks than I do Intel. So I don't want you to take this as it's a big position within the semiconductor portfolio of my stock portfolio, but it's in there at the current time. Now, we got news from Taiwan Semiconductor this week. Shares dropped by about 4%. We'll get a full readout on Taiwan Semiconductor earnings on January 16th. So just a couple of days from now. Now, a lot of that won't actually be new news, although the company will likely give us guidance for the upcoming quarter that will guide investors and guide the semiconductor industry. Now, tell you what, if it's anything like the past quarter and past 3 months for Taiwan Semiconductor, it will be absolutely sensational. The company gives us monthly totals as it relates to revenue, and it's just been absolutely sensational. Year over year revenue over at Taiwan Semiconductor soared 57.8% year over year. Now, month over month, we've seen some flattening of demand, but it's just showing you that demand is not slowing down at all. In fact, it was up nearly 1% month over month. What it's showing me is Taiwan Semiconductor is probably operating at darn near max capacity. Okay, they don't have much more capacity probably to push through even more chips, but year over year, demand and revenues are up fantastic amounts of money. When you look year over year, for a 12-month basis, you are up over 33%, which is just staggering for a company that's worth north of $860 billion. For them to grow their revenues year over year by over 30%, it's just showing you something that we already know, that the trend is right in the right direction for this company. Now, one good thing is the fact that the company is beginning to produce 4 nanometer, which is kind of the leading edge chips out here in Arizona. The rumors are these could be for AMD, but also Apple as well. This is not just production from what I'm hearing, but they are getting yields that are on par with the quality of Taiwan. So they've spun this factory up very, very rapidly, giving the company another area to manufacture these chips here in the United States. Another factory in Arizona is expected to begin breaking ground within a couple of years. If demand continues to be this red hot, well, this gives Taiwan Semiconductor the ability to continue to expand these revenues and expand their earnings, as again, the yields tend to be as good here in the United States as they're seen in Taiwan. It also gives the company a little bit of margin of safety, as there's always that Chinese risk hanging over the island of Taiwan. But as I remind investors all the time, I always hear something. Whenever I talk about Taiwan Semiconductor, I always hear, well, what about China? Here's what I'm going to tell you guys, and I say this all the time. If China invades Taiwan, your entire stock portfolio is going to take a crap. You will see a crash in the stock market like you've never seen before, other than maybe Lockheed Martin and a handful of just US-based companies, Procter & Gamble, Johnson & Johnson, companies that rely on semiconductors, but maybe rely a little bit less on semiconductors. But literally 90% of the stock market would have a dramatic turn lower. So don't try to avoid that risk. It is one of the stupidest arguments that I've ever heard. And I constantly get it when you talk about Taiwan Semiconductor is some of you get in the comments or you email me or you get on social media and you talk about it. It's not even worth talking about it. It's almost like saying that if there's an earthquake in San Francisco, things will get disrupted. If there's wildfires in Los Angeles, homes are going to get burned down. If China invades Taiwan, it is going to be a bad event, not just for Taiwan Semiconductor, not just for the semiconductor industry. It's going to be a bad day for the entire stock market. Moving over to Super Microcomputer, the embattled semiconductor manufacturer, assembler, whatever you want to call them, saw its shares down by about 14%. I tell you what, if Nvidia shares are down 9%, this one being down 14% certainly makes a lot of sense. We'll hear from Super Micro when they report their earnings the first week of February on February 4th. Although, again, with Super Micro, they haven't reported or given us a set of audited financials, so who knows what we'll get in February. You're rolling the dice, obviously, with this. But we did get some anecdotal news out of the server manufacturing business, and that is HP actually won a $1 billion AI server deal with Elon Musk, beating out not only Super Microcomputer, but also Dell as well. So HP getting into the business. They were already in this business. They were viewed as kind of not necessarily one of the market leaders, but it is business that is generating higher and higher revenues, as you see here. According to Bloomberg, over the past 3 quarters, they've really skyrocketed those AI server growth. And with Supermicro having certain types of problems, and obviously Dell in the marketplace as well, what this is showing me is there's going to be downward pressures on pricing. That yes, you are going to have plenty of demand out there as it relates to Nvidia, as it relates to Taiwan Semiconductor. We are seeing that there's going to be plenty of demand for high-end server manufacturing. And so Supermicro will benefit a little bit, but how much upward pricing pressures? What will that do to margins, cash flows that were already negative over at Supermicro when you have very, very capable competitors like Dell and HPE, US-based companies as well, without the overhangs that you're seeing over at Supermicro? What will that mean for Supermicro? We'll obviously get to know. And obviously overhanging Supermicro is they are due with 2 sets of audited financials within the next, I think, 40 days or so. And not a peep out of the company and not a whisper if those will actually materialize. And if they don't materialize, my guess is the stock will be delisted and a lot of you will be holding an empty bag of money. Now, buckle your seatbelts, because really over the next 30 days or so, you've got every major semiconductor company reporting earnings. Towards the tail end of the earnings season, as you get into late February, you'll get Nvidia, Broadcom, Marvell, Micron kind of kicks off what is essentially kind of a new season there. But initially, we get Taiwan Semiconductor earnings next week, and then that follows with Qualcomm, ASML, Lam Research, CLS, smaller networking company or kind of a supplier to the networking companies. And the first of the major designers will come with Intel right at the end of this month. We'll obviously be here to cover a lot of that news. Now, from a technical perspective, we'll just take one look at the SOXX ETF. This one can be a buy. You've been channeling upward since October of 2022. I've actually started and kind of accumulated a position here. You can draw this line in however you want. I actually started buying back here. I think it was like November, late November, I think it was. And so this one's continued to drift higher. On the conservative side, you can set a stop loss down below these lows here at 206. So you're risking 218, 219, depending on where you buy in. 206, you're risking $12 to the downside. You want to be a little bit more aggressive. There's a certain area here you would not want to see shares break through. That would be 193. So you're looking closer to maybe about $30 of downside there. The upside is to make a new higher high, at least in the shorter term, up here at 237. That's about $20 in upside. Getting back to the middle of the channel gets you back into the 250s, 260s. A new higher high on the index would take you back up here in 270s. That's $50 in upside. So it's not this huge risk reward thing. This is an ETF, but you can accumulate shares if you believe the trend is going to continue higher. And obviously, over the coming 30 days, 40 days or so, we'll see if this one's going to break higher or lower based on all of these results. And on top of that, like we said, you get Amazon, you get Google, you get Meta, and a plethora of other cloud service providers providing insights into how much they are going to spend on their data centers over the 2025. And if Microsoft's any indication, well, it's probably going to be much, much higher than the previous year. Hopefully, you guys enjoyed today's video. We'll be back again next week. Good luck with your investments.